Hey guys, it's Sam with ReadySetGo.com. Welcome to my Udemy course. Pleasure to have you guys aboard. Hopefully, this course is something that you find interesting and helps you with your own investing and financial planning down the road. So, the main purpose of my course, it's called Dividend Growth Investing 101. And the main purpose is to kind of teach you guys the fundamental principles of what dividend growth investing is. Kind of want to prepare you as well to become a dividend growth investor if you think that this is a strategy that might be beneficial and kind of fits your investment needs down the road. Before we get started, I want to kind of lay out the foundation of what you need to know to actually take this course. And the honest truth is, not much at all. If you have, if you're just a beginning investor or you're an aspiring investor, you just want to learn about the strategy, what it might involve down the road. Highly recommend you go through the entire course. We'll touch on a few different subjects. We won't go too deep. I'm not going to teach you guys how to, analyze stocks or go through all the different metrics, but this will give you the foundation, the preliminary understanding of what it's going to require to kind of implement this strategy moving forward. So let's go ahead and get started. So, what is dividend growth investing? So, dividend growth investing is essentially a very long term strategy where you're purchasing shares of companies, mature and stable companies, by that I mean, and they pay out quarterly dividends based on their earnings. And when they pay out these dividends, you reinvest them to buy more shares of the company and accumulate a larger position in your portfolio moving forward. So over the course of 10, 15 years, you're not only getting the profits from the price, the appreciation of the stock price, but you're also consistently generating a passive income every month where you're able to reinvest. That actually increases your dividend payout for the next quarter. Then you reinvest that, increases your dividend payout for the next quarter, and so on and so on. So it's kind of a compounding growth effect. And it's over the long term, this has been shown to be very, very effective. You're not, the risk is minimal. See, since we are investing in these companies that are highly, highly stable, they are profitable, and you know, there's no risk with the stock going to zero. These companies aren't going to drop, from 100% to zero overnight. These are mature, stable companies, and using that knowledge to get companies in a downswing where their stock prices continue to go up, and then as well as they continue to grow their dividends, increase their profits through optimizing their business or increasing their net profit margins, whatever it may be. If they're continuing to grow their earnings, they're going to continue to grow their dividend, and that means that you're going to have more money in your pocket to reinvest every quarter. All right. So why exactly do this? Having that understanding, the biggest thing with dividend growth investing is that it's passive. Like Coca-Cola and Walmart, these companies have been out for a very long time. They have so many locations, so many ways of generating revenue that you can kind of buy your position, hold it, and just let it run. Coca-Cola is not going to go anywhere in the next 5, 10 years. And if they do, it's going to be worldwide news, and you'll definitely know about it before that happens. But at the end of the day, if you're doing swing trading and you're investing in these small biotech companies where each earnings release equates to 30, 40% change in stock price, and that's how you're trying to make a quick buck, get in, get out, that's not passive. You need to watch the markets every single day. You need to constantly be aware of what your positions, what's happening with your positions, and that's kind of stressful. You know, Personally, I work a 40-hour week job, but it ends up being about 60 to 70 hours a week at work. So it's not something that I can't really devote much time to watching the stock market. But at the same time, I don't want to just not have my money working for me. My goal is to secure financial freedom for me, for myself and my family. I want to lower the age of retirement, and this allows me to get a solid return with my portfolio without causing a huge headache every day or every week, looking through the stock market, analyzing all these different companies. It's a much slower approach to the stock market, but in the long run, it is that compounding growth. I am seeing the returns that I expect to see if I was a day trader that was actively trading, or if I was a money manager that was doing this for a full time job. So it's an extremely powerful, powerful way of investing. All right, so let's take another look at this. Let's break down exactly what it would look like. All right, so if I were to invest in Johnson and Johnson using a dividend growth investing strategy, I would have purchased 200 shares at a $62 stock price. That would yield me. So when Johnson and Johnson releases their quarterly earnings statement, they'll also announce what their dividend payout is. And based on that $62 stock price for that first quarter, owning 200 shares, I would have gotten a $113 dividend, which would have allowed me to purchase an additional 1.8226 shares. So, if you see stock price 62, I'm getting $113 that allows me to buy 1.8 shares, which goes back into my total shares and increases my position value. All right. So then going down to quarter two, 3 months later, the stock price has gone down to 61. Not a bad thing, dollar drop. But at the same time, since I own 201.8 shares, now I'm getting a $114 dividend. So stock price 61 in quarter two, dividend I receive is $114. That allows me to purchase another 1.86 shares, which brings up my total shares to 203.7, and that gives me a new position value of 12,425. All right. So now this is where it becomes beautiful. This was a down quarter, right? So now let's go to the next one. Quarter three, stock price goes up $64. That allows me to receive a $115 dividend. I reinvest that to purchase another 1.81 shares, bringing my total shares up to 205.5. Now my position value is at 13,152. All right, so keep with that logic, going to quarter four, stock price 65, get a $116 dividend, allows me to purchase 1.78 shares, brings my total shares up to 207, and now my position value is 13,474. So over the course of, that's 4 quarters, that's 1 year, stock price hasn't fluctuated much. So if I was to use just a general trading strategy, you'd see that, I may not have made from 62 to 65, $3 difference might not have made that much. But by specifically choosing a dividend stock and getting almost $500 worth of dividends and reinvesting them, I was able to purchase another 10 shares. And, over the long run, that's 1 year. Now look at that over the course of 10, 15 years. If you're buying about 7 shares a year in the first year, you know, at that time, getting that dividend to it'll continue to grow. Johnson and Johnson will continue to grow their earnings, and they'll continue to pay out a higher dividend, and that's kind of a cyclical effect. That's power compounding. So now let's take a look at it over the course of 40 years. This is what you can kind of expect if you are continuing to reinvest your dividends and you are continuing to kind of see, actively choosing companies that are poised for growth in the future, then it's amazing. By not taking money out, but just putting it back in, you can grow your portfolio so much faster. And that's what it kind of boils down to here. By year 20, I want my portfolio to be growing my own portfolio, not me actively taking money out of my salary to continue to grow my portfolio. And that's the passive nature of this investment strategy. And that's exactly what I kind of do with a lot of my businesses, all my websites, everything that I do to achieve financial freedom. It's in the hopes of earning a passive income, monthly income, and that's why dividend growth investing appealed to me so much, and that's why I hope you guys see the power of what this type of strategy and what looking long term can really do for you. All right, well that's it for lesson one, guys. Check back for a lesson two here, and we will dive a little bit deeper. Great. Well, thank you guys for watching. See you guys soon.